Welcome to the Probate Nation. A Virginia probate is a process to transfer the title or ownership of probate assets to the beneficiary of a deceased person. Not all assets are probate assets, and there are different types of probate, some simple, others more complicated. Like a journey on a slow-moving steam engine train, probate of an estate has a beginning, several stops along the way, and at the end of the trip, the balance of the probate assets remaining are delivered to the decedent's beneficiaries. Some probate train rides are short, while other probates seem to never end. Our program today introduces you to the Commissioner of Accounts for the City of Alexandria, who oversees the probate of Alexandria City estates. The Commissioner has oversight of and must approve many of your decisions in probate, from what you propose to pay or have already paid, to what you distribute to each beneficiary of the Alexandria estate being probated. This program will identify steps to take and pitfalls to avoid so you receive the Commissioner's necessary approval to continue on your probate journey. So let's move forward and introduce you with our guest today is Gary Lonergan, Commissioner of Accounts of the Circuit Court of the City of Alexandria. Mr. Lonergan was appointed to this position by the court on January 19, 2016. Prior to his appointment in 2016, Mr. Lonergan served as Assistant Commissioner of Accounts for the City of Alexandria for 15 years. In his role as Commissioner of Accounts, he oversees the administration of estates for decedents, minors, and incapacitated individuals. Gary also maintains a law practice in Alexandria where he focuses on business formation, estate planning, and estate administration. Please welcome Gary Lonergan, Commissioner of Accounts for the City of Alexandria. Gary, welcome.
Thank you, Richard.
It's nice to have you come visit with us.
Pleased to be here with you.
You know, we talk about the probate process, you know, is in Virginia is really somewhat unique, you know, and we look around the country and we found that it's very, very different. Tell us a little bit about the Virginia probate process.
The Virginia probate process has been in its current form since 1849. Prior to 1849, if an individual died and an individual was appointed as personal representative or fiduciary of their estate, that individual could get a friend, non-lawyer, to supervise their administration of the estate. Mm-hmm. That led to grave difficulties. So, as you can imagine, and in 1849, the legislature decided to implement the Commissioner of Accounts system, and one of the requirements for a Commissioner of Accounts is that the Commissioner be an attorney at law.
Okay. So the role of the Commissioner of Accounts office, your office, what are your duties and responsibilities now?
I could simplify them, there are a lot of rules, but I could simplify them to say that my job is to make sure that debts get paid, taxes get paid, and people get what they're entitled to. In that role, we oversee various kinds of estates. Mm-hmm. When someone dies, a decedent's estate, mm-hmm. when a minor comes into money, a parent has died and there's a lump sum of money that comes into the benefit of the minor, then we oversee that. When someone becomes mentally incapacitated and the court appoints a conservator, we oversee that conservator. We also audit foreclosures. Mm-hmm. When there's a trustee who has foreclosed on real estate, we oversee that process also.
So it's really quite a large area. In the context of dealing with an estate, tell us about the volume of cases that you are handling in your office when in the probate of an estate.
I have 2 auditors and another auditor who works half-time. Between them, they have 10 to 20 years experience. In 2016, we audited approximately 100 inventories, approximately 500 accounts that were submitted to us for approval, and 75 foreclosures.
Wow. So they're busy.
They are busy.
They're busy. When someone is going to take on the role to be an administrator or an executor, do you have any recommended reading that you suggest that they take a look at?
The start process is always with the clerk of the court. And in Alexandria, our deputy probate clerk is Ben Ortiz. So that process would start with Mr. Ortiz, and when that individual, by appointment, goes in to see Mr. Ortiz, and he issues them their qualification papers, he hands them a packet of papers that both describe what they must do, what fees they can charge, and what forms they must file. He goes through that with them. We help Mr. Ortiz with those forms.
Is that this packet? We were going to show on the screen this first page of what's called Instruction to Executors and Administrators. So this is the packet. And
Yes.
I would tell our viewers
Yes.
it's a rather voluminous package of materials with forms and samples and so on that help you work through, I guess, many different steps in the probate process.
It's a very linear process that starts with Mr. Ortiz. That's your start date, and then there are going to be deadlines falling from that date, and those forms help you with that. The simple answer is read the forms.
That's true. That's true. So after somebody qualifies, as an administrator or executor, what are some of the very first steps they should take in order to get, in order to properly administer an estate?
In the forms that Mr. Ortiz hands them is a one-page called Tips for Fiduciaries. I wish I could say I was smart enough to develop it. I took it from the Commissioner of Accounts down in Roanoke, who Mr. Pat Weisgarver, who's been at this longer than I have, but found it very, very effective. And in Virginia probate is what is called a charge-discharge system. It's not double entry bookkeeping accounting. You charge yourself with control of the assets by filing the inventory, which is due within 4 months of the date you qualify. But once you qualify with Mr. Ortiz and he gives you that paper, it's called a certificate of qualification, then you're in control, and the first thing you must do is marshal your assets. You might have to go right to a bank and get savings and checking accounts.
Okay.
You might have to deal with a stockbroker, and you would get control of those. And the tips for fiduciaries basically say, it's not your money. You're the chief executive officer of a thing called an estate. So you would have to set up a separate checking account.
Sure.
You would have to get a tax ID number that you can do through the Internal Revenue Service. And there are now companies out there that are saying, we'll get it for you. You don't have to use those. So we have put in the package from Mr. Ortiz a notice. You don't have to spend money to get a tax ID number. You can go online to treasury.gov and get it yourself.
So these are that's a good place, those starting points of things you got to do, bank account and so on, to get yourself rolling. Now, as they do that, then they also have to begin to make some reports to your office, okay? Because as you say, you're overseeing, you're auditing and so on, and so they're filing an inventory, have to file an accounting. Tell us a little bit about that process.
The inventory is due within 4 months after the qualification. And the reason why it's due that quickly is the system wants you to get out there and take control over it and marshal these assets, put them in the estate name. The value that we use for the inventory is date of death. So you go to the bank and say, the decedent had a checking account here. I need that money. That check should be payable to the estate, but you should also tell the banker, I need to know what the value of that account is as of date of death, because there could be transactions on either side of it that would change what you actually get from the bank.
That's true.
And so within a year after you file your inventory, so 4 months, 12 months, a total of 16 months, you must file an account. And in the packet that Mr. Ortiz hands the fiduciary are sample account forms, which have a summary sheet, and then the fiduciary provides backup to the summary sheet. So it's a very linear process. And when someone qualifies, one of either Mr. Ortiz or one of his assistants comes over with the file and says, they've qualified. We put it in our system.
Oh.
So we know. And so we know that there's an inventory due in 4 months. And if we don't get it, we wait typically 10 days and we send the fiduciary a letter saying, where's your inventory? Because we are supervised probate.
Well, that's interesting. I know you've stressed how closely you work with Mr. Ortiz, and your offices are directly across from each other, and so that's an example how people get logged into the system, so you know when they're supposed to file something and if they don't. Now, what happens if they don't timely file? You say you give them a notice, but if they don't get it done after that notice, what happens next?
We give them a late letter, and if they don't respond to the late letter, then we issue a summons, which is going to be served if you live in the city of Alexandria and you're a fiduciary, the sheriff's going to come to your door with a summons from my office saying, where is your inventory? If they ignore the late letter and the summons, then I would file a petition with the court to have them brought before a judge to determine if they should be held in contempt, fined, or removed. So
pretty serious.
The system takes it seriously. It is serious. It's not the fiduciary's money. It's other people's money.
Well, that leads us to the next thing. As you file these accountings, certainly on the inventory, there's no real need to attach supporting documentation at that stage as far as the values generally.
Correct.
But once you get into the accounting process, it becomes, as you say, much more serious in the sense that we really need to verify. What do we need to show along the way for expenses, income, and stuff like that?
The first account is part of the process of discharging what you've charged yourself with the inventory. As you've indicated, Richard, in the inventory, it's sworn to. You're saying, I have control of these assets. We don't ask you to verify them. But when you come forward with your account, then we're going to need to see the bank statements. We're going to need to see the brokerage statements.
Sure.
The bank statements, we want to see the embedded checks within them. If the bank doesn't give them to you, we're going to say you got to go to the bank and get copies of the checks so that we can see check number so-and-so, this amount, who was the payee.
Sure.
The summary sheet says, though, beginning balance from the inventory, receipts, gains on sale. You had stock. You booked it at 100. You sold it for 200. That changed to cash, and you had gain.
Of course.
Maybe you had loss. It went the other way. The market went down a little bit. So you show loss, then you show disbursements. The final thing is you may have made some distributions to the beneficiaries. If the fiduciary felt that there was sufficient cash on hand and sufficient assets, and there were no outstanding tax liability, the fiduciary may have made distributions to beneficiaries. For those, that's a higher standard because there have been abuses. We want a receipt signed by the beneficiary acknowledging I got my money and I got my share of this estate.
Sure. Yeah, based on your, I know your experience in office, you have put together a list of tips of fiduciary. We're going to come back to that in a second. What is the most common reason an account is not approved by your office?
I would say it doesn't balance. We give them the summary form. Some people won't use that summary form, and it makes it hard for the auditor because the summary form, if you do it right, it balances it for you. But I would say the form, it's in the wrong format, Well, there's no backup documentation.
Okay.
I know we had one come in. It was actually an attorney. The attorney doesn't do probate work. It was just the summary page, and there was no backup.
Well,
No checking accounts.
That's not going to go any
No,
place.
it was not good. But the auditors said, sent him a letter saying, we need the bank statements.
Sure.
We need the brokerage statements. So they didn't submit the backup. Or at some people, they just can't balance it.
Sure.
That there's that one number and they're off by $98.13. They'll come in and let my auditors get a different set of eyes on it. Call it a sanity check, if you will.
Sure.
And we're happy to work with people in that area. Where we get nervous is if we see perhaps that money has gone in a direction that it shouldn't have.
Sure.
If it's there and it's just a matter of mathematics, then we're happy to fix it.
Well, I think that's one of the things I know you stress is that your office is really there to help people because you're there to serve the public.
Yes.
And protect the public. So people should take advantage of that great experience you guys have. Now we've talked a little bit about, and I know we're going to show on screen we call it tips, but these are top rules for fiduciaries. They're tips as well, if you would, but these are a collection of as you said, your experience and other people's experiences over the years. Why don't you just take a couple minutes to kind of go over a few more of those tips? I know you started to touch on that earlier in the program, things that you want to really stress that folks take a look at.
Okay. Yeah, I've already talked about keep it separate. Keep a separate checkbook.
Mm-hmm.
If you've got stocks, keep a separate brokerage account.
Mm-hmm.
If you have the stock certificates themselves, go to a broker that you know and put all the stock positions in one bucket, if you will. Keep copies of checks,
Mm-hmm.
detail money. Just keep a running chart of this came in, this check for $14.88 refund from the Washington Post. 8 months from now, you're not going to remember what it was.
Sure.
But if you keep a copy of the check, and these were all my deposits, that will assist you in making your account. Every check that you write, have this, this was the payee and the check number, but keep a copy of the check and the bill that you paid.
Mm-hmm.
It was X dollars to a funeral home. Have that bill behind it so you know that check for whatever it is was for funeral services, or you paid $200 for a priest or a minister to talk at the gravesite.
Sure.
You're going to go, that $200, what was that for? If you got the backup, that was what it is. Don't pay debts too quickly. You could have an insolvent estate, and then that can be a real problem. You've got to manage this business, right? You've got to say, here are my assets, or my liabilities. Sometimes they're way above, and it's not a concern. If they're close, then you've got to really mind your P's and Q's.
I think that leads us to our next topic. Of course, one of the most important roles that your office does have, of course, is to protect the creditors of the estate, to make sure that they get paid if there's enough money to do that. Talk a little bit about how we get that properly framed. I know, as you say, don't pay people too quickly if you think you don't have enough money, but talk a little bit about that.
Creditors in Virginia really have two ways in which to get repaid, to be simplistic. One, they always can go to court. They can always file a suit in either general district court or circuit court,
mm-hmm.
and reduce their claim to judgment if it's unpaid. They have another choice, that is they file a notice of claim with me.
Mm-hmm.
By our fee schedule, they pay a $55 fee. We log it into our office, and I will not close an estate unless and until that claim has been disposed of one way, shape, or form.
Okay.
And it's either been paid or I've held a hearing.
Okay.
It's called a debts and demands hearing, and I listen to the parties, and I can either allow or disallow that claim. If I allow it, it's got to be paid. if the estate's insolvent, then it could be paid in part.
Well, I think that leads us to and that's important, of course. If you have an insolvent estate and you want to figure that out early on in the process, tell about some of the challenges that an administrator faces and should be aware of if they're actually facing an insolvent estate.
We have an insolvency statute. I think it's 64.2528, but don't hold me to that, please. The notion is it's similar to a bankruptcy priority.
Okay.
And it basically says when there is not enough money to pay, this is the order in which people are paid. Start with administrative expenses. The executor's entitled to be paid. That's first priority. The second is there are statutory allowances in Virginia where children or a spouse can say, I'm entitled to this statutory right, and elect those. Those are in the second category. And then you fall to funeral homes, and then you fall to taxes, and it goes down to 9 levels. If you're at the bottom rung at level 9, you're basically an unsecured creditor, perhaps a credit card. And you may get nothing because you didn't get that far, or you may get a pro rata.
Now that's interesting because I know that a lot of people quickly pay or reimburse a family member who has paid for a funeral. If you end up with an insolvent estate, it might be that they're only protected for a certain portion of that payment. And talk a little bit about that, because that's a common problem we see.
It is a common problem, and it's sad to see when that happens, because you've got a family member or a friend who, just because of financial circumstances, steps up and feels like they're doing the right thing. The statutory limit on funeral home payment is $4,000, which is quite low, as I think anyone would know,
Sure.
having been through that process. That doesn't get you real far in the process. And so when that happens and it's insolvent, then either the third party who paid it is getting stuck and not being totally reimbursed, or the fiduciary reimburses too much and then has to go and get money back from the person that they paid too much for. Yeah. So not a happy circumstance.
No,
so an area to be careful of.
Very much so. And I think that's certainly an area where they need to come and speak with you about that early in the process if they think they have that problem. Well, we're coming to the close of our show. How about some final thoughts? This is all a very complicated process. First off, does a fiduciary need to hire an attorney?
Doesn't have to. There's no legal requirement to do that. In a simple estate, between reading the forms and perhaps with some assistance from my staff, an individual, particularly someone who's been through it before, some way, shape, or form, is probably going to be able to get through it. It's the complicated estates where the individual had an interest in an LLC. It's hard to value that.
Sure.
Or the individual had a lot of stocks, bonds, and mutual funds. Those you're probably going to have a lawyer and perhaps even a CPA involved in that. The individual who's insolvent, probably a good idea to have a lawyer. But if the fiduciary wants to do it by themselves, then the answer is it's all here in the forms that Mr. Ortiz gives you. Read the forms, ask the questions. We'll help you as best we can.
Well, that's very helpful. Well, Gary, I want to thank you for taking the time to come and talk to us today, for sharing all this valuable information and for the great public service you do to the Circuit Court of Alexandria and the citizens of Alexandria as well. So thank you very much for taking the time.
Well, thank you very much for inviting me, Richard.
It's our pleasure to have you. Without a doubt, probate can be complicated and confusing. Commissioner Gary Lonergan and the entire staff at the Commissioner of Accounts Office for the City of Alexandria do a wonderful job of explaining, teaching, and guiding those responsible for probating Alexandria estates as to what needs to be done, when, and by who. From inventory filings to accountings, from debt hearings to distributions to beneficiaries, each and every topic and much more is laid out in simple, plain language in their instructions to executors and administrators that is handed out to each person who qualifies to probate an estate in Alexandria. I encourage you to review these instructions carefully, especially the tips for fiduciaries that Commissioner Gary Lonergan put together from his experience and that of others over the years. What I take away from our visit with Commissioner Gary Lonergan is that if problems arise in an estate probate, as they will from time to time, do not hesitate to lean on them for assistance. If you're having problems with an accounting, his experienced staff can help sort it out and get you back on track. In short, Gary and his staff are easy to work with and very proactive in mentoring executors and bringing folks together to resolve differences so the probate is administered properly and closed promptly. They perform a great service for the City of Alexandria community, and we're thankful for their commitment in doing so. This brings us to the conclusion of our show on the City of Alexandria Commissioner of Accounts. You got qualified in the City of Alexandria Probate Office, and you now understand the role of the Commissioner of Accounts as your probate journey continues, including what you need to file with them, how they can help you along the way. You have much more work to do in probating an estate, but take a moment to enjoy the view as your probate train picks up speed and continues on its journey through the historic downtown of the City of Alexandria. On behalf of the Probate Nation, thank you for visiting with us.